Snapchat investors need to be careful, and it's all related to stock-based compensation for this company. Let's take a quick look and analyze this together. It can very much be summarized by one picture that I found online on a blog while doing research. We see investors here inside the castle. And then management presenting this beautiful wooden horse here of amazing free cash flow, not knowing what's hiding inside these numbers. Well, we can take a closer look at this today. So I went into the cash flow statement. In this case, we can see here the three most important statements that the company make. They are all there on whatever platform you check on when you do your own due diligence. We can see operating cash flow being positive. We can see investment and financing cash flow as well. The investing being positive here, and then financing being negative. All these three summarizes down to the free cash flow, which we can see comes in quite strong here in recent years. Although, remember the picture of the beautiful wooden horse. We can see one item here. I've broken it down, you can do this yourself. You just keep pressing the arrow to see what's inside. And we find stock-based compensation here in operating cash flow. And this is in thousands of dollars. So you can see the impact here. That, this is, wow, yeah, it's $1 billion. And we can see that the total free cash flow, 437 million. So if it weren't for this stock-based compensation here being a non-cash expense to the company, well, then Snapchat would actually be losing money in a free cash flow basis. And this helps explain why stock price has absolutely cratered. Is management planning to change anything here recently? I did some quick research here looking at some results there for the fourth quarter and full year of last year. This would be the most recent earnings report. Not only do we see slow growth, in this case 10% year on year, that is not the best for a company here of 8.71 billion. This is a small company, by the way. You compare this to, for example, Reddit, a larger company, 26 billion, and they are growing a lot faster. 10% growth, that's not even acceptable in a Google earnings call, in my opinion. When we see this year-on-year growth, very, very slow. We also see a few acquisitions, undisclosed in terms of the amount, but should not affect dilution as much as dilution is affected. We're gonna take a look at the total numbers in terms of shares outstanding going forward after we just cover a few numbers here in the earnings report, so you guys can follow along and see, if you're watching this video in the future, if Snapchat is actually doing progress in the correct direction. I'm actually gonna throw in a bit of a bonus here related to revenue at the end of the video as well. But alright, margins looking okay. Quarter operating cash flow, of course, highlighting that one. We saw where a lot of the positivity is coming from. Net income, and then an announcement here that I will read to those of you who are listening in regarding their repurchasing program here. Remember the numbers, $1 billion billion. That's the cost. Snap Inc. also announced today its board of directors has authorized a stock repurchase program of up to 500 million of its Class A common stock. Repurchase of the Class A common stock may be made from time to time, either through open market transactions or through privately negotiated transactions, so block trades, in accordance with applicable securities laws. The timing and actual number of shares repurchased will depend on a variety of factors, including stock price, trading volume, market and economic conditions, and other general business considerations. Alright, so a 500 million repurchase program here, authorized over 12 months, but could be stopped or whatever at any time. Remember the number? Stock-based compensation, $1 billion. This is only offsetting part of the dilution if they do not reduce this in any meaningful way. So this is on Macro Trends, great website. We can see the number of shares outstanding, so this is in millions of shares for the full year here, and then we can see it on a quarterly basis as well. And the number of shares is just increasing and increasing and increasing. We looked at acquisitions, nothing super notable disclosed, high level, where a lot of stock would be involved. Despite this, the amount of shares outstanding is increasing and increasing. And it's not stock splits, it's not acquisitions, it's stock-based compensation. Friend of mine used to work at Snap. Signing bonus, stocks, part of the salary, stocks, RSUs, nothing uncommon. But when Google and Meta does this, it's in relation to profitability, and this number is closely tracked by investors so that the ratios are not off. In the case of Snapchat, the ratios are off. They are diluting shares. If you're a long-term shareholder, then this meme here is not even funny. It's quite sad for bag holders in this case. So share dilution is the number one reason that I will stay away from Snapchat stock. Now, with regards to revenue, I promised a bonus. We need to understand where revenues are coming from. Of course, it's from serving ads, like the senator saying, Mark tells, we're selling ads, senator. You know that already. But we can divide this further down into 3 areas. We have the amount of ads shown, in total, ads served, and we can see this as a result of users on the platform. That's why users are important. Everybody tracking daily active users. Meta does this, Reddit does this, Snapchat does this. Daily active users, that's the one aspect of the revenue. And then we have the time spent on the platform, very important. They spend more time, they scroll in a feed for a long time, more ads will be served. It's just common sense. And then the third one, where Snap is in a lot of trouble compared to competition, especially compared to Google in this case. Data about the user, so relevant ads are being served. And Meta figured this out a long time ago based on all the interests. You follow pages on the platform. Google figures this out based on your website activity, browser history, all of this. Reddit is managing to figure this out based on your interactions with certain communities that indicates interests, but Snapchat is having a tougher time proving to advertisers that their ads are relevant ads, relevant ads being served, getting results. So why should advertisers pay premium dollars for the ads? So, effectiveness, relevance sets the price. And then we have two components dictating the amount of ads being shown. So amount of ads times the average price that advertisers are paying the ads to get the revenue. And they can pull the different levers, but they have geographical data on the people. They can use that, but it's tougher to get to know more about the users. And in the case of Meta, they managed to solve this, all right, by doing pixels and by working with sellers to set up, pixel one on Meta side and one on the seller side, because Meta is already big, they're already massive, they're already very important for advertisers. But smaller companies such as Snap, they can't do it. Why is this important? It's not worth the hassle for the advertiser. Well, with, for example, Apple's new privacy policy of tracking between apps, this just makes it a lot harder. And this was a big worry for Meta back in the day. Remember, stock price absolutely cratering, spending a lot on this virtual reality stuff, and also this big worry regarding tracking. They solved it, Snapchat did not. So we have this resulting in advertisers paying less. And then, sure, daily active users are nice on Snapchat, but time spent. I actually downloaded the app, but I did not really know what to do in it. There was not communities to interact with and stuff like this, and I'm 30, so I'm not gonna ask any of my friends to create this just to try it out for you guys in terms of stock research. So that's a bit of a blind spot still in terms of how the ad units actually work and this kind of stuff. I made commentary regarding ad units on Reddit, but I will not do that on Snapchat because I feel like I did not really understand the user interface and I was not able to get a clear picture of how the ad units actually work. But we covered the most important aspect. We covered stock-based compensation, diluting investors, being a Trojan horse. And you got a bonus regarding this sluggish revenue growth, so you understand better where this sluggishness is coming from. Now, as an investor, do you believe that Snapchat will be able to turn this around, to be able to do better tracking, retain users on the platform for longer or get more users? Perfectly fine, growth is gonna skyrocket. Or will they not overcome this challenge and continue to be less and less relevant in the advertiser landscape, as is happening right now? Alright, that's been it for this video, and as always, I hope you guys make a ton of money, whatever investments you decide to make. Take care now, bye bye.